In 2009, Bitcoin blockchain was introduced to the world. It did not take very long for governments and banks to see the opportunities for themselves in this new technology. Now, we do know from the 2015 report from the IMF on how they would take us cashless, that what was standing in their way to go below zero was cash. So, for those that have been paying attention, you might have noticed once they get rid of cash, then they feel they would no longer have any constraints. And so 2016 saw the war on cash significantly escalate. I'd like to welcome you to ITM Trading's educational series, A Peek Beneath the Skin of the Markets. I'm Lynette Zhang, Chief Market Analyst here at ITM Trading since 2002. Since 1964, I've been a collector and a banker and a stockbroker, so it should be pretty easy to see that I have been groomed for this moment in time, and I am on a mission. My mission is to convert financial noise into understandable language. What you're going to see today is the fruits of my research, and what I'm going to provide for you is how I interpret all of that research with other research that I've done over time. I am completely convinced that we are already in transition to a new money standard. And I think some of my listeners have been aware of that too. So today we need to talk about Bitcoin blockchain and how that is likely to impact you. So first of all, we need to give you an overall view of exactly what it is. Then I'm going to show you that any wealth that you hold inside of that system is vulnerable in the next crisis. But since this is a monetary standard change, we need to ask ourselves, what are we working for? Because money is a tool to value and store our labor. So we'll be looking at that today as well. So let's get started with what is Bitcoin blockchain and DLT. Well, simply put, Bitcoin is a virtual currency or a digital representation of wealth. Bitcoins are created via transactions that are transmitted messages over a network. So every time somebody uses a Bitcoin to buy something, new Bitcoins are born. And you can see since its inception in 2009 how that has grown to date. Now there are entities that are called miners of Bitcoins. And what that really is computers on a network that compete to solve a very complex mathematical equation. The more Bitcoins that they find, the more complex that equation becomes. The first entity or person to publish the correct answer discovers the block and gets to collect those brand new Bitcoins. Now this requires an extremely high level of energy. So in the early stages over here, anybody with a laptop computer or desktop could easily find the Bitcoins and make a little money on it. But today, as you're going to see in a minute, with the big guys getting involved, that's really no longer possible. This is from the report on the IMF, and they show you how all of these Bitcoins are held in these ledgers all around the world. Now this is a peer-to-peer network, which means it's direct. You don't have a middleman. We're going to talk a little bit more about that. But you can see that it eliminates a central transmitter like a central bank or a banking entity, because you can go peer-to-peer, which may seem like a good idea, but everybody has access to this network of ledgers. And I'm going to talk a little bit more about that in a minute. Since Bitcoin's inception in 2009, you can look and see how demand, which are these gold bars, and the price has been quite volatile. Both of them have been quite volatile. So let's just kind of summarize and see if I can give you the concept here. A Bitcoin is a transactional message, but what that's kind of like, you go to the store and you use your debit card. A block is like your monthly statement that shows you all the transactions that you did for that month. And then a blockchain is how those blocks are grouped together and give you the sum total of every single transaction you have ever done over the course of your lifetime, once this is all set up. So what the blockchain really does is it links all record-keeping networks. So it could be education, it could be medical, it could be financial. Everything is linked on a universal cyber ledger that you can access, that different people, entities can access. These networks can be either public or private, but they digitally represent your assets or assets. And it allows for automatic confirmation and then ownership transfer, just like that. Again, we're at a peer-to-peer network, so that eliminates the middleman, the banks, the central banks. I mean, to some degree. It can also be a centralized network, but essentially, and I want you to think about this for a minute, we know that confidence has been really declining, and we know that that's going to continue to do so. So in a blockchain being a trustless network, no party is responsible or accountable when something goes wrong. So if you stop and think about what happened in 2008 and all of the banks paying all of the fines for all of the things that they did because we as the public held them accountable, the government didn't hold them accountable, but we did, well, that would be eliminated on this network. So this is what you really need to understand about blockchain. It holds an individual's life in one accessible location. Now, I'm 62, so my generation, older generations, were more comfortable with more degrees of privacy and autonomy. So personally, I am not comfortable with this. You have to make up your own mind. That's just how I feel about it personally.